So good morning. I'm Peter Towers, Managing Director of ESS BIZTOOLS, obviously not a technocrat, and I really do hope that you can hear me. Those of you who are watching this webinar at a later time, which was more suitable for you, welcome. If you have any questions, can you please send me an email, peter@ESS BIZTOOLS. For those of you who are watching live, you can send me a question through chat, please. So this is who we are. This webinar is targeted at bookkeepers and accountants who may not have been actively involved in delivering advisory services to SME clients before. And hopefully we're going to take you through the processes in this webinar, which is looking at the use of systems, because I believe that these are the key foundations for successful businesses. They are definitely built on systems. The systems should be created to suit the business operations. So what are the business's objectives? These should all be embedded in the business plan. The business plan is one of the very important systems that I think every business should have created. It's difficult to imagine how people are running businesses without having a written plan. It doesn't have to be War and Peace. It doesn't have to be 100 pages. It might be 5 or 6 pages. And some people are able to condense them into a one-page report, but that's another story. But the broad objectives of what's the business, what's its activity, how's it going to create income, how's it going to generate profits, who are the team, who are going to be the suppliers, what arrangements have been negotiated with the suppliers. A year ago, MYOB conducted a survey of 1,000 SMEs, and in February last year, the CEO of MYOB, Paul Robson, wrote an article which was in the Financial Review. And one of a number of issues that he discussed were that some of the firms that they'd surveyed had obviously not made any prior arrangements with suppliers. So they were rather upset when they found out that the supplier wanted cash with order when they rang them or sent an email to place their first order. They obviously had not made prior inquiries. This is part of the planning for a business, that those things need to be done. They clearly do know what the terms of trade are going to be with their selected suppliers. Maybe they should have gone to another supplier. So these objectives should be embedded in the business plan. Communications is a high priority. In fact, it's part of the culture of the business, is how the communications are going to be held. And I think communications should be looked at on a daily, weekly, monthly basis. Now, the daily meeting might only last 5 minutes. It's basically, was there any problems yesterday that we immediately need to sort out? Now, this would be the leadership team. In the other business components, there may be a need for a daily meeting just to get underway for the day and look at anything that wasn't completed yesterday that needs to be the priority for today, just getting those sort of things sorted out. The weekly meeting, I think, is very important, especially for the leadership team, because it should be to consider the weekly performance report. We'll talk more about that later, but I think that's a vital report. And it's one of the big differences between the big end of town and how SMEs operate. And I think it explains a lot of the difficulties that SMEs have. And SMEs are having all sorts of problems at present, aren't they? The failure rate's growing. Interest rates, even though they come down 0.25% last week, it's not much, is it? So there's all sorts of problems out there for SMEs. And by having a weekly report that analyzes the results, I think it can help your clients run better businesses. And then we've got the monthly meeting. Now, the monthly meeting is very important because that should be to consider the actual profit and loss account for the month, the balance sheet, and the analysis of key items within the profit and loss account, but also in particular the balance sheet and how that relates to the cash flow forecast. But more about that later. I just would like you to think about the rhythm of meetings. In fact, in a podcast that I recorded with my great friend Andrew Geddes, who was one of the founders of the Financial Management Research Centre 42 years ago at the University of New England, and went on to become a very well-known accountancy industry consultant, and for 10 years was the chair of a top 200 ASX company, Green Cross Limited. Andrew emphasised in the podcast the high level of importance that he and the leadership team within Green Cross placed on the rhythm of meetings, people knowing the time they were going to be held, who was taking the minutes or the notes on the meeting, and the action plan out of every meeting. Very important to keep that team spirit strong within the organisation, because occasionally there's going to be blow-ups. There's going to be something goes wrong. And how can it be fixed? So this is who we are. I think this is important, that as accountants or bookkeepers who are going to be supplying these services to your clients, you need to be saying, this is who we are. We're producing this for you. These are the systems that we think you should be embedding into your business to make your business more successful. Every business needs the financial plan, which is the interpretation of the business plan. This is the predictive accounting reports, budgets, key drivers, cash flow forecasts, and projected balance sheets. Now, the key drivers are very important because that is the key sub-accounts, inventory, debtors, creditors, where the amount of money tied up in those activities can increase very quickly without a lot of supervision at times. And it's definitely going to affect the cash flow forecast, isn't it? If the level of inventory, debtors is increasing, not so much creditors. But it's important also, of course, if the business is in its budget, has budgeted that the creditors' days outstanding is going to be 40 days, that you try to ensure that that's what it is. Now, there can be pressure from the creditors, of course, that they want to get paid quicker, and they might threaten to withhold supply. But it's no use doing a forecast saying we're going to be paying creditors on a 40-day basis, and then to find out that because you've got a very efficient clerk in the client's office and everything's getting paid on 30 days, that doesn't give you that little bit of spare capacity in the cash flow system. I think it's important that you have budgets for each operations. I hate the concept of preparing budgets and financial accounts on a consolidated basis. I think we should be breaking everything down into its business units. So if your client's got 5 sections, it might be 2 retail outlets, it might be a repair business, it might be a storage facility, and perhaps the office. I think there should be 5 profit and loss accounts. Now, if at the end of the financial year you want to bring it all together into a consolidated profit and loss account, you can do so. But you lose the ability to analyse the individual performances unless you have separate profit and loss accounts and budgets for each activity. Years ago, I was involved in a very major review of a business, and when I got involved, I found out that there were 19 activities in the business. So they knew how many activities they had. But when I asked for the financial accounts, I got given a consolidated set of accounts. And I said to the accountant, who was an external accountant, not an internal accountant, I said, can I have the profit and loss accounts for the individual businesses, thanks, the 19 of them. I know we don't do that. We put it all together in one. And the reason I was there is that an unexplained major loss had started to occur in this business. And everyone was worried from the bank down. And I was asked to go in and review what was wrong. So I won't bore you with all the details, because 2 weeks later, we were able to clearly identify that one key activity
there had been a change in the work environment. They were a trucking business, and they had 14 trucks on the road doing a journey of about 500 kilometres and then coming back. And there'd been a change because one of the bridges they used to cross over had been withdrawn from use by the Main Roads Department. They wouldn't allow these trucks to go over. So, okay, that's pretty routine, isn't it? And the extra journey now, I'm told, was about 300 kilometres a trip. Must have been 150 each way. But no one told the boss. No one told whoever raised the invoices. No one told whoever communicated with the customer. Even today, when I go through this story and tell it, I can't quite believe that that's what happened, but that's what did happen. And when we identified where the problem was, the CEO called a team meeting. I turned up for the team meeting. I thought it was starting at 6 a.m. and I got there at 10 to 6, and there was about 40 people there already. And they told me they'd been there since 5 a.m. They'd all had these phone calls that night. And someone just walked over to me and said, they have fixed up the changing the invoices because of the extra journey we got to do, haven't we? And I looked at him and I said, what did you say? And he said, he repeated himself. And I said, what changes? He said, well, Main Roads ruled repairing one of the bridges and wouldn't allow our trucks to go over it. They're too heavy. So we had to divert. I thought everyone knew, he said. I said, everyone except whoever raises the invoice, whoever negotiates with the customer, and the CEO. So we had a quick discussion, and very quickly we found out that was the problem, but the company had lost a lot of money. And that would have been highlighted a lot quicker if they'd been receiving individual profit and loss accounts for each business activity. We need to follow through and look at the cash flow forecast and then the projected balance sheet. So this is all part of the predictive accounting reports, which are very important. Businesses need a team to operate efficiently in any business. And we're talking about your client's business now, not a large business, a client's business. So there's the manager, it might be the owner. There's normally an operations person in the business. The owner manager really can't do it all. And there's normally someone who's marketing or sales, might have been predominantly sales, but these days there's more and more of a marketing emphasis. And there's probably a bookkeeping or accounting person, or there could be. So who's there? Who's in the team? So this basic business structure is not always available. But by having some input from an experienced advisory firm, the SME business will give itself the best chance of operating successfully. So this is really the position that ESS BIZTOOLS is coming from. We think that within that team environment within the business, you need to be able to input your services as an advisory service. The taxation is left to one side. It's an important part of all your responsibilities to your client, whatever you're doing for them on the taxation side, normally the preparation of an annual set of accounts and the tax return. But that doesn't help them run their businesses on a day-by-day basis. That doesn't help them find the sort of problems that I was just alluding to, which was finally all discovered in about April of the year because everyone was getting worried. The bank overdraft had gone through the roof because this was costing a lot of money. I'm amazed that no one picked it up, but this particular business didn't really worry about key performance indicators or business metrics. They do now, but they didn't then. And we had to implement those systems for them to make sure someone was looking at it because there were obvious identifications that something was wrong. The petrol bill had gone through the roof, or the fuel bill. But obviously no one picked it up because this went on for months. Whereas it could have been picked up a lot easier because a weekly performance report analysing the profitability or the loss for a week would have suddenly shown, gee, what's happened here? Our main activities suddenly losing $25,000 or whatever it would have been on a weekly basis. What's gone wrong? They quickly would have found out that they were incurring a lot of extra costs.
So I think this is the sort of role that bookkeepers and accountants can play in stepping up on the service that you're providing. Now, you have to determine what level you want to go to. And you might say, we haven't got the resources, but ESS BIZTOOLS has developed the resources. Based on my experience, 25 years since we started producing what is now known as ESS BIZTOOLS, we've had thousands of accounting firms in Australia and New Zealand using our systems to help you run better businesses. So the business operations system needs to be implemented. In most instances, requires the basic team approach. Unfortunately, my observation is where businesses don't have this approach, they get into difficulties, and in this current environment, they'll probably fail. And no one wants that. The next concept is that what we are really advocating is a business operates for 52 weeks of the year. It doesn't only operate for a couple of weeks when taxation work's determined. Well, let me put it another way. Operating week by week by week for 52 weeks, there's all sorts of issues arise that if you were employed on a full-time basis as the accountant, you would be involved in those discussions, wouldn't you? You would be working with the owner or the manager to determine what went wrong. Perhaps you would have found the problem, I hope you would have, that I just alluded to, because it was a massive problem. So I think we should be implementing accounting guidance and scrutiny into our clients' businesses on the basis of a 52-week-of-the-year system. Now, you mightn't really do much on the daily or weekly basis other than to set up the systems and make sure they're happening. On a monthly basis, you would be reviewing the monthly profit and loss account and reconciling back to the weekly results, because it's very important that management has confidence in the weekly performance report, because it is going to be based on some estimated costs. You should know the income, know the wages, you know the wages on costs, so you know a lot of the key things, but there'll be some items that we have a budget estimate that gets taken into account in the weekly profitability report. Because what we're wanting this report for is if you find a problem, it can be fixed within a couple of days. It doesn't stay in the system for the next 51 weeks if this is only week one of the financial year. Now, not everyone agrees on this 52-week philosophy, but I think it's very important. It's what the larger businesses do. I was the CEO, the chief financial officer, I never made the CEO, in a listed public company. And everything was run on the weeklies. In fact, the CEO used to say to me at the end of the month, did the monthly result reconcile with the weekly performance reports? In other words, he's relying, and the managers that he was supervising were relying on the accuracy of the weekly reports that the accounting teams around Australia were producing. And it's going to be the same thing with your clients. We want the management people to rely on them, because if they get a result, let's look at a retail operation, they might have had an expectation of a 38% gross profit percentage. And the weekly performance report is saying 22%. We want them to react, not to just say, oh, well, we'll worry about it next week. They should, so they've got to have confidence in the data that's been presented to them so that they review it. And they may have found that someone made a clerical error. They may have found there was fraud. They may have found that there's been a mistake made in one of their systems. And if they hadn't have fixed it then, that problem could well have continued throughout the year. How many of your clients know what their gross profit percentage was for the week ending last Saturday or Sunday, depending on when they traded? How many of them know? How many of them know what their result was? They might know their turnover, but if they analysed it to get their gross profit percentage, their labour to turnover percentage, and the bottom line, and then compared it back to their budget, that's why it's so important. And that's why businesses are operating for 52 weeks of the year. So this is the financial scrutiny throughout the year. This is real accounting work. Tax returns are important, but they do not help businesses to run their businesses effectively. And I was a senior partner in an accounting firm for quite a number of years, and we produced thousands of tax returns for businesses and people over the years. But none of those tax returns ever helped anyone run their business. It was the ones that we had put onto what we called our monthly accounting cycle that we were far more involved in and run far better businesses. So I think our last comment on this slide is very important. Successful businesses require ongoing financial, commercial, management accountancy input weekly and monthly throughout the year. Not just every so often, not just a couple of times when taxation returns have been looked at, but throughout the year. So and this is what successful businesses do. And you may have some clients who are very successful, who are either getting you to do these services, or they have someone, it might be the spouse who is an accountant and is able to go in and do this analysis. But successful businesses, especially the ones that start growing and scaling up, they do this. Now, if they need this sort of input, a lot of other businesses also need it. The ones that are not traveling well, the ones that suddenly have debtors days outstanding, when you analyse it, it's over 70 days, but they didn't really realise it. It's important that people understand these key metrics relating to a business. So it's not only the profit and loss account. So you might be setting the scene and saying, okay, we're going to get profit and loss accounts prepared each month, and we're going to compare them. We're going to compare back to the weeklies. But there's then other associated indicators that need to be examined. The key performance indicators: gross profit percentage, labour to turnover percentage, net profit to sales percentage. All these percentages, when you line them up and analyse them, can mean something. And I used to like doing them on handwritten spreadsheets, so long before the word spreadsheets were used with computers. And you could pick it a mile off if there was a problem, because the result just was out of whack. So that's where you had to investigate. Are your clients doing that? They might be using business metrics, benchmarking comparisons, benchmarking.com.au, which is also originally part of Financial Management Research Centre that I mentioned a little bit earlier, produces a great benchmarking report. And financial analysis on a range of matters. This is management accounting that, unfortunately, I don't think enough accountants get involved in. So what is the break-even analysis? What are the cash flow projections? What about some costing exercises? When I was in a public company environment, I had 2 people working for me who were our costing team. They did costing exercises all day, every week, because management was asking if we change this or we change that. Now, we were a major Australian meat exporter. We had operations going and we had retail butcher shops, but there was costing exercises all of the time. Who does the costing exercises for your client? Now, they might need 2 people full time, but who does them? Do you? Have they got someone who can prepare these exercises for them? If not, it should be part of the role that you're supplying. Factor it in. What if analysis? I call it the what if analysis because that's what I used to cop every day virtually, and sometimes on the weekends. I'd get phone calls from the CEO. Hey, Pete, what if we did it this way and this way? Because my CEO, I think, used to get by on about 4 hours sleep a night and used to lie there going through the business and saying, well, if we change it this way, if we change it that way. Now, no one will convince me that he was the only CEO that ever operated like that, because I met plenty of others and I think they might have been the same. But what about our SME CEOs? Plenty of them wake up at 3 a.m. because I talk to them in my consulting business. People contact me and We do work for them. We do some of this planning we're talking about now. And they say, well, we don't know who to turn to. What about your accountant? My accountant's only involved in the tax returns. I had a situation a few years ago. I was running a series of presentations on corporate governance that Oz Industry hired me to do. And it was to go to various mining towns in Queensland and present these. We did about 8 or 9 of them. And in one of them, we were talking about directors' responsibilities and relating to debtors and debtors' days outstanding. And a lady, there's about 45 people in the room, and a lady at the back put up a hand and said, what should our debtors' days outstanding be? I said, well, what sort of business are you in? What's your level of debtors? What's your terms of trade? And she looked at me and said, well, I don't really know all that. So it was getting close to morning tea. I could see the caterers were getting set up down the back. So I said, how about we have morning tea now? And I went up to her and I said, can you give me some of your details? And she told me their turnover and she told me their debtors balance. And I said, what's your role? She said, I'm the office manager. And you don't look at any of this. No. And I calculated, and the debtors' days outstanding was 102 days. And she must have seen the look on my face. She said, is that high? I said, it's very high. I said, who owns this business? She said, my father. I said, does he ever get cranky? Oh, yeah, when the bank manager rings. I said, well, I can understand why. You got a lot of money tied up in debtors. And I said, have you got an accountant? Yeah, we've got an accountant. He's not here. He's 300 kilometres away, but, there's an accountant. I said, okay, so what's the accountant say to you about your debtors balance? Oh, no, he never talks to us about that. He just does the tax return. I knew that accountant, I realised after. I'd met him at various conferences and I ran into him a couple of weeks later. And he said, I hear you've been out talking to so-and-so. I said, yeah, they were at a corporate governance conference, seminar I was presenting. And he said, they go, all right. I said, well, I was a bit surprised that their debtors' days outstanding was 102 days. And he just looked at me and said, yeah. I said, well, did you ever raise this with him? He said, not part of my role. Now, I didn't have a ding-dong row with the man, but I felt like it. But this is, I hope I'm illustrating. I'm not trying to have a go at accountants. I am an accountant. I did a lot of tax returns over the years, on my team did. But I think we need to be looking at these key ingredients which help our clients run a better business. And that's the whole emphasis of ESS BIZTOOLS. Because I think that accountant should have been looking at that debtors' days outstanding and doing the 1 minute exercise and saying, gee, it's 102 days. What can we do about it? And I'm not going to bore you now, but there were some key things they could have done because they fitted the criteria for a special early payment arrangement that BHP had negotiated for the coal mining industry that these people knew nothing about. And obviously their accountant had not told them, even though he was operating in this general area. So we'll move on because we'll run out of time. Cash flow management advice. It's very important as part of your role. You've got the monthly accounts. You're looking at what these key indicators are saying in inventory investment, debtors, the creditors arrangements and so on, capital expenditure, perhaps research and development projects. What's it all mean? What's the cash flow forecast saying is now going to be the position in 6 or 7 months' time? Is there a problem starting to emerge? Should there be some discussion starting to be held with your clients about where they're going to get the funding to cover that cash flow problem in 6 months' time? Do they need to consider trying to raise capital? Do you want to talk to them about the potential of using crowdsourced funding equity raising? Works very well. Over $450 million has been raised in Australia from crowdsourced funding equity raising, and I don't think it's even touched the surface. Not enough accountants know about it because we're the key profession to be talking to clients about how they can fix these problems. We need to be embedding ourselves more in the thinking that we are sitting at a desk in our client's office. We are the internal accountant or chief financial officer, whatever title you want. But if you were there
35, 38 hours a week, whatever you work, you'd be conscious of these things, because you can't sit there doing profit and loss accounts all day. Those people are doing other things. And the advisory services that we're supplying to our clients is giving them these services. So the weekly profitability analysis report, I've already talked about that. It's a key document. In fact, I think it's the most important document. When I first got involved in the meat industry, I found that it was in the system of the company I was with. I made some changes as the chief financial officer, but basically the system continued. Later on, I found out the whole meat industry was the same. Then I found that Woolworths and Coles had exactly the same approach, and so does IGA, because I did some consulting to some of the IGA stores later on, and it's the same thing. They know the results on a department by department basis. 40, 35, 50 departments in some of those big stores. They know their results. So if there's a problem, they can immediately fix it. What does your client do running an SME business? And the profitability results or the losses are known within 48 hours at the end of the month. There can be real action. Because in most cases for SMEs, they don't know that this problem's occurred. They've seen the sales figure, but unless it's analysed properly, they don't know that the gross profit percentage, in fact, only come in at 22%, whereas it should have been 38%. Where's the money gone? What happened? Now, it could be as simple as there was a stock take error, but we need to find the problem and get them fixed. So the scene, as I see it for business operations, is the results can be immediately compared to budget. If there are variations, there's an immediate investigation so that the problem can be fixed now, not carried through. Not the situation we're taking through the 38 and 22% exercise that, how long? 4 or 5 months after the end of the financial year. So the client might have had this problem in the first week of the financial year. So he's traded then for another 51 weeks. So we've had 52 weeks of this problem, but he doesn't get to see you until the end of November. So we've gone for another 4 months and this problem's continued. And you're then sitting down with him and saying, gee, Jack or Mary, your trading in the previous financial year averaged at around 37% gross profit percentage. This year's only come in at 22, 23%. So your bottom line is looking very poor. And they'll say, yeah, well, our bank balance was down, but our inventory had gone up and we lost track of it a bit. We just kept on trading because the problem had stayed in the system. Now, it won't always happen like that. I know that. I'm probably overemphasizing it, but it can happen. It can happen in that case that I told you before, the 19 sections in the business operations in the business all lumped together in one profit and loss account. Management loses control when that happens. The only thing they got for control is probably the revenue figure, and they didn't use that either. Well, they probably did, thinking about it as I said that. The revenue was what it had always been, but it should have been higher because they were now having to do these extra trips. No one had even bothered to have a discussion with their client. Their client ultimately agreed to pay them more money. Was a bit surprised they hadn't been approached months before. I found out subsequently. But they didn't make a back payment. But they agreed from that day they'd pay more money. So I think offering these services is real work to assist your SME clients. So who's doing all this for your clients? That's the question I'm putting there to you. Who's helping them manage their business from a financial, a costing, a management accounting point of view? Because that's what is covered in all this. Nothing to do with taxation. You can do that as a separate exercise at some stage during the year. But in the meantime, we need to make sure that our clients are operating viable businesses. So I'm rubbing the point in, I suppose, but accountants who are employed in larger businesses don't just sit there producing profit and loss accounts. It's all part of this financial, commercial, management accounting function that goes on. And that's the key function that has to be introduced to help SMEs survive.
Well, that's the viewpoint we have at ESS BIZTOOLS. And I think it's the original brief that was given by the University of New England to the team under Dr. Jeff Meredith, then later Professor Jeff Meredith, Andrew Geddes, and others, to start the financial management research team. It's what the Institute of Chartered Accountants and the then Australian Society of Accountants commissioned them to do, to develop a range of services that accountancy firms could deliver to SMEs to help them run more effective businesses. In those days, we didn't use the terminology scale up, but they could have effectively included that in that, and help companies that want to grow to scale up and really take on the world, but they'll need all this documentation. So the scene is now set. The leadership team can be briefed on the results each week. They can then take corrective action to make sure things are then going to operate. I don't think this will happen unless there's input from either their bookkeeping firm or their accounting firm, or maybe both of you. Maybe the bookkeepers go to a certain level and then the accounting. But there needs to be an approach to help your clients. Otherwise, these problems are going to continue. Otherwise, the insolvency figures will continue to rise and the business failures will continue to rise. And the problem will be overcome. I've already said that, so I won't take you through that. We need to know what caused that result, fix the problem. If you need to give justification to your client as to why you're advising them, give them these sort of examples, saying you're there to help them fix the problems, to run a business on a more commercial basis. So the ESS BIZTOOLS Starter Package includes a range of resources to assist you in this financial commercial management accountancy services. It includes the SME Needs Analysis, which is in every product package ESS has produced. It includes documentation on fiscal management, debtors and suppliers. And I've highlighted that because that's in response to the MYOB survey on SMEs, whereby there was real problems with many of their clients that were analysed, in that they had assumed, first of all, they had to give credit to anyone that asked for it. Secondly, they had assumed that everyone would pay them within 30 days, even though Australia's got the highest debtors days outstanding in the world. I really hope they never got advice from an accountant or a bookkeeper in setting up their strategy for their business, because if so, there were a lot of mistakes made or the client wasn't listening. I think we need to be more forthright in discussing with people starting off in business, and even the ones that are already in business, to make sure they realise these things are important. Because what happened with those MYOB survey businesses, they'd run out of money. Because their first blow was that suppliers wanted cash up front. They'd budgeted they would have 30-day terms from their suppliers. I assume they hadn't contacted the suppliers and confirmed it in writing. So that was the first problem. The second problem was they had assumed that everyone they gave credit to would pay them in 30 days. That didn't happen either. We didn't ascertain whether they were issuing tax invoices with the payment date clearly identified on them. We didn't find that out from the MYOB survey, but I wondered that. And then what happened? The tax man come a-calling, because the tax officers are a lot more aggressive at present than what they were a few years ago in the COVID crisis. So they're looking to try to recover money. The Financial Review yesterday saying there's $50 billion owed to the tax office. Well, the tax office is trying to collect on behalf of the federal government. And a lot of that is owed by SMEs, apparently. So we need to be having these sorts of discussions, because what happened was that the businesses run out of money, and that problem really occurred after 6 months for the new businesses. They survived to then, but then it was really the tax office demanding for payment of the tax and superannuation, etc., from employees. Research and development introductions, another key product package that's included in the starter package. Because there's thousands of SMEs around Australia undertake research and development and claim it. I think there's also thousands of others who would like to claim it, but really don't know where to start. And part of that problem is, I think there's too many accountants and potentially bookkeepers say, oh, we don't understand it, we don't do it. Well, it's part of the Tax Act. I've had accountants ring me at times and say, oh, Peter, we can't do anything. We only concentrate on the Tax Act. Well, research and development is in the Tax Act. That's number one. Number two, if you don't supply these services to SME clients, you'll ultimately lose them. They will gravitate to the big four type firms who promote that they're able to assist them. So we've developed a full package. We've even got very large top 100 firms subscribing to use our R&D package. But we have a special introductory program because we want you to be able to answer a question. If a client walks in and says, oh, I heard that one of my competitors got some sort of research and development grant or assistance, why can't I get that? We've all had those sort of questions raised. I was going to say conversations. They normally demand questions, I call them. Haven't we? Well, I wanted that you could immediately just click on, and on your screen you'd have the introduction to R&D, and that would tell you you've got to be a company. You've got to spend $20,000 in the financial year on legitimate R&D. There's various reports to be submitted to Oz Industry and the tax office. You've got to keep records. But if you're saying to me, like a couple of accountants have said, oh, you've got to be a scientist or a engineer to advise on research and development, I say, hang on. You are not to advise on the research and development. That's your client that's doing that. I think your role, if you want to identify what your role is, I think your role is the internal auditor. Because within the ESS BIZTOOLS system, we have 46 forms that we've prepared. Now, you won't need 46 forms for one client, but if you have 10, 15 clients doing R&D, you might need that 46 forms over a year because of the different circumstances that some of your clients will be in. Your role is to make the client aware these are the forms that have got to get completed. Some are daily, weekly, monthly, the same thing, because they've got to account for what their team members are doing on research and development. We've got a full documentation of the whole thing. Your role is to make sure they've completed it all. And this could be the start of a wonderful journey on innovation. We've got a retail pricing package within the starter package. This helps you to assist a retailer or a wholesaler who have got this various components of stock. Everything's got different markups on it and different volumes and everything else. How do they ever put it all into their businesses and try to achieve their profit target? Well, based on what some research FMRC had originally done, we have a system which will help you supply that advice. We've also got a tradies charge out rate calculator, which is very popular for some of our accountants, and that's in the advisory intro package, which is the original package we've got. So we're aware of the difficulties that everyone's got at present. We're all living in the same country. We know there's problems. There's problems with businesses. A lot of the businesses are failing, but we want to help. We want you to be able to help. So we want to help you to deliver these services. So we have discounted our packages for 12 months. So you pay a 12-month subscription and you get 24/7 access. So for the advisory intro package, we have reduced that to $499. That's a 50% reduction, including GST. And for the starter package, we've also reduced that by 50% to $990. So you can get started in delivering these sort of advisory services. We have training built into it and all that's summarised on our website. So please go to www.essbiztools.com.au and click on packages and pricing, and then click on the advisory intro package or the starter package. There's another 2 packages there, but they're higher up. You can subscribe to them if you want to, but there's no special promotion on them at present. And then click on subscribe now. In 24 hours, we'll be back to you and we will have given you your guidelines to start using your package of choice. And we will be advising you of the first training session, 45 minutes to 60 minutes training session that we'll be delivering on the package that you're subscribed for. But if you want to go to the other training sessions, we tell you when they're all on. So we present 40 training sessions a year. We've got 4 major product packages. They get each one gets 10 each. But if you want to go to one of the others, you want to go to the financial forecasting, which is our top end product, and understand corporate governance and board of advice and how to deal with venture capitalists and all that, you can go to it, have a look at it, and you might decide you wish to upgrade your subscription because you want to offer those services to your clients. So the next session on for the advisory intro subscribers, we've got a special training session on the 5th of March at 10:30 a.m. So please go ahead and complete your subscription, and we'll be talking to you on the 5th of March. That's a special training session we've introduced. And if we get a few people out of this presentation who decide they want to go for the starter package, we'll present a special starter package the week later, training session. And then we get into the ongoing training programs of about once a month, none in December and none in January is normally the plan we work with. People are preoccupied with other things then. So if you've got any questions relating to the products or services that we offer, please send us an email, peter@ESSBIZTOOLS.com.au, or you can telephone me 0747241118. And we'll be happy to talk to you. And I'm happy to talk to you about 40 minutes on a complimentary basis. And you can tell me a bit about your firm, your team, your clients, and I'll tell you which package that ESS BIZTOOLS has got, which I think can help you deliver those services. Because I really look forward to the day that in Australia, that accountancy firms, when they look at their fee mix, are able to say, well, we get about 50% out of taxation-related matters, but 50% out of financial, commercial, advisory services to our clients. Because then I think we will be really playing a vital role in helping our SME clients survive. If you have any questions you think about later on, please send me an email, peter@ESSBIZTOOLS.com.au. Stay safe. Have a great day. Goodbye.